the top 6 reasons why alternative credit is so powerful and is available to anyone. So what is alternative credit? Alternative credit is just a different name for what we call business credit. But the reason why we call it alternative credit is because a lot of people think you got to have an established business in order to start building alternative credit or business credit, and that's just not true. So what are the 6 benefits of having alternative credit? Number 1 is higher credit limits and higher sign-up offers. So when we're talking about higher, we're talking about comparing it to a traditional credit card or traditional loan. Credit options are better. The credit limits are higher, so you can get approved for higher amounts, and their sign-up offers to entice you to sign up are much greater as well. More points, more ability to have cash back, so on and so forth. The second thing is it motivates you to create a secondary income. It allows you to create business credit, which is super exciting, to help you create a business, take an idea that you have as a hobby and build it into a business. Number 3 is higher debt leverage. So kind of back to number 1, with higher limits, you're actually going to have more leverage. So you're going to be able to take out more money and utilize debt differently and be able to have more available cash that you could utilize towards assets. Number 4 is doesn't require to have an actual business that is established today. You just have to have an idea and formulate your LLC the correct way. And that's really all you need, is to pay for the cost of creating an LLC, which is less than $500, and build just the business understanding or maybe the structure. But you don't actually have to have an active business that's producing income in order to build alternative credit. Number 5 is it doesn't report to your personal credit unless, of course, you're personally guaranteeing a certain loan. But what this allows you to do is keep your personal credit separate from your alternative credit. And alternative credit is just look at it as a secondary social. It allows you to build credit under 2 different profiles so you can maximize your ability and your credit leverage. And then lastly, it's less risk and liability utilizing alternative credit. Again, if you structure LLC correctly, it can limit a lot of the risks that personal credit have, which personal credit, if you default or charge back a certain loan, they can come after you for litigation directly. Whereas alternative credit, there's a lot of different ways that you can structure LLC to help avoid a lot of the immediate repercussions if you default on certain loans. It just gives you a little bit less risk than utilizing a personal credit report, credit score. So building alternative credit has so many different advantages to help you be able to utilize credit leverage. And these are the top 6 that I have.